Hello everyone, myself Vaibhav. In today's session, the biggest mover has been the ECB's policy announcement and thereafter the press conference by the president of ECB, Miss Christine Lagarde. And as expected, there is no policy change from the ECB. Only last month we saw that the ECB has increased its pandemic emergency purchase program, the PEPP program, by 500 billion euros. And in today's meeting, Ms. Lagarde has underscored the importance of that accommodative policy stance, and she has emphasized that ECB is not likely to change its monetary policy stance anytime soon, and these accommodative policies are likely to last at least till March 2022. And given the fact the weakness in the euro area economy, in which we are seeing the continued lockdown restrictions, and also the pandemic is still raging, and as a result of that the economic activity has taken a hit, and in this backdrop we will have to wait a while before the inflation picks up, and unless the gains are visible in inflation, the ECB is not likely to raise or start raising interest rates, and that's not going to happen at least till later 2023. So policy stance is going to help the equity segment of the market, and given the backdrop of bridging of the gap between the USD and Euro in terms of the rate differential, we have seen the Euro appreciate, and even in today's session, we saw that prior to the ECB's announcement, the ECB was on the rise and it went on till 1.216. Thereafter, it has corrected somewhat, but I feel that looking at its current consolidation phase, which has seen the levels of 1.210 being respected in yesterday's session, also we saw the reversal happening fairly close to that level. And if in today's session we see the similar kind of price action holding out, I think we are likely to see the change in trajectory of the Euro USD in the near term, and as a result of that, we can look forward to looking for some buying opportunities in the Euro USD today's sessions and also the sessions coming ahead. And now moving on to the North American trading session, we got these weekly initial jobless claims for the United States, and for this week also, the week ended 16th of January, the US initial jobless claims remain elevated at 900,000. These are little less than the expected reading, but compared to pre-pandemic days, fairly high. And the prior week's number were even higher, so there is some consolation, but not much, as the pandemic is still raging in the US, just like the case of European countries. And unless the pandemic is back brought in control, we are likely to witness this sort of numbers in coming weeks also. Now moving on to the technical front, we will first see the developments for the Euro USD, and then we will also move on to the technical analysis for the equity index of the Germany, the DAX. Let's start with the Euro USD's technical outlook first. This is the daily time frame chart, and here we have seen the Euro USD turning the corner closer to the 38.2% Fibonacci retracement. Just a couple of days back, we saw this reversal happening, and for last two trading sessions, it has been able to hold onto those initial buying support level, and it has tried to add to those gains in today's session also. So looking at that, I feel that unless and until there is a significant breakdown on the lower side, we can be fairly hopeful of possible change in this corrective phase momentum, and from short to medium term perspective, the things might start looking bullish again. And for that, we have to watch out for some key levels. And the, of course, most important in the near term is going to be the central pivot point, which is there around 1.215. In today's session, we saw the EURUSD trying to cross above it. It did cross above that, but it hasn't been really successful to hold on to these gains, and now it is again sliding back below it. But still, I feel given the fact that there is a second attempt of the Euro USD in trying to cross and hold above it. This time around, it might be different, but of course, first we will have to wait for the stabilization of the price action in the Euro USD, and only after that we can look for fresh buying opportunity, if any. If we take into consideration the regression curve is still inclined on the bearish side. The only thing to take note of is this the price action is now in the upper band of this regression curve, and as a result of that, we can expect flattening of the regression curve to some extent if the price action continues to remain in this upper band, and eventually, if it is able to hold and continue its momentum on the higher side, then the significant shift can come. So near term, we will have to watch out for this key SMA confluence zone. The three SMAs are converging closer to 1.210. On the lower side, we have this 100 SMA, and closer to the 1.215 zone, we have this 50 and 100 SMA. For the time being, the EURUSD has been able to cross above the 200 SMA. So it will be interesting to see if it is able to sustain its gain and this break above the crucial SMA. And if it does, then I think we will have more reasons to believe the possible reversal, and we can look for fresh buying opportunities anywhere closer to these 50 SMA. I would also like to repeat that this SMA confluence is the key area, and if we see the 50 SMA also crossing above the 200 SMA, then that will add one more confirmatory factor to our bullish trajectory, and we will have more reasons to believe in the EURUSD's continuation of the bullish momentum. And the entry point is going to be closer to this convergence zone between the 50 and 100 SMA, while keeping the stop loss anywhere below these 100 SMA. I think the yesterday's low, which was there around 1.2107, no, sorry, 1.21, it should be closer to 1.207, not 1.217. So pardon me on that count. And that level should be our decisive marker from the near-term perspective. Unless and until there is any break below that level, we can continue to look for the buying opportunities in EURUSD, and our desired entry point can be anywhere between these 100 SMA and the convergence of 50 and 200 SMA. Suppose if in today's session we see the consolidation happening above these crucial SMA convergence after this correction comes to an end. Right now, the EURUSD is correcting after the ECB's monetary policy announcement. So we will have to give it some time to figure out what's in store for us. If it stops correcting, stops the move on the lower side, and if it consolidates while holding well above these 100 SMA, then I think we will have good reasons to believe in the possible turn on the bullish side in the EURUSD, and to capitalize on that, we can look for buying opportunities anywhere in the price band of 1.210 to 1.212. That's the price band of around 20 pips. And with that in mind, the stop loss can be kept closer to the prior swing low, the yesterday's swing low, which is there around 1.207. So for a risk of around 30 to 40 pips, it might even extend to 50 pips depending on your entry point. We can look for a possible reversal, and as a result of that, to cover the risk which we will be taking, the target can be kept closer to the 1.22 range. And looking at the volatility which we have observed in the Euro USD, if the change in trajectory upwards, then I think we can pretty much expect the Euro USD to cross above 1.22 in coming sessions. Now let's see what's happening in the equity index for the Germany, the DAX. This is the daily time frame chart, and here the DAX has shown the DAX has shown some buying momentum closer to the 13,700, and in today's session we are seeing the incremental gains in the DAX. So I think we can look for buying trade in the DAX as it has tried to cross above the 14,000 mark. Couple of days back, we had looked at the consolidation of the DAX closer to the 14,000 level and possible break on the lower side. That did came true, and we saw this break, which eventually took the DAX closer to the 13,700 level. But after getting there, it did found some buying momentum, and this technical level, which was also the prior swing high, has helped the DAX in getting some buying momentum. And now here we are looking at the DAX with the possible break above the 14,000 mark. So if we are going to capitalize on this changing situation, I think we will have to keep a keen eye on this price action in the lower time frame chart, where we will have to rely on the immediate trajectory of the DX. Here we have the resistance coming into play. The first resistance of this month's pivot point series around 14,100, and this was the price zone where the DAX struggled last time around. But as I said, it has found some buying momentum on the lower side, and it is again trying to regain its lost ground. And this time around, the things might turn out to be different, and we might indeed see a break above this crucial resistance zone if the DAX continues on its current bullish trajectory. And if we want to figure out the possible entry and exit points, I think we will have to rely on this formation of higher highs and higher lows in the DAX. Here we have this 100 SMA acting as our near-term support. We also have this possible crossover of 50 SMA above the 200 SMA in today's session itself, and that will add one more reason to believe in the bullishness of the DAX, as we will have the golden cross in place whenever the 50 SMA crosses above the 200 SMA, and on the lower side we can utilize this 100 SMA zone of around 13,870 to be a decisive marker from short to medium term perspective. So here in today's session, we can look for the buying opportunity in the DX anywhere in the price band around 13,900, and with that the stop loss can be kept closer to the prior swing low, and on the higher side, the price zone can work out even above the prior swing high. So if we are going to go for a fresh buying opportunity anywhere closer to 13,900 while keeping the stop loss closer to the 13,800, we can target at least twice the amount of risk we are taking. That means our target should be of around 200 points, and for that we will have to look at the possible swing high zone of around 14,100, and then only we will be able to get that kind of risk reward ratio while keeping our trading possibilities open. And we will of course trying to contain the risk and to make sure that in case we happen to be wrong, we are not losing too much money. We will have to take the risk which we can afford. And I think given the fact that we have to take the stop loss of around 100 pips. We will have to be careful, 100 points, pips, and we will have to take the lot size accordingly to make sure that we don't suffer too much in case of being wrong, and we should stand to gain good amount of money in case our anticipation comes true. So that's it from my side for today's session. If you have any query or any idea to share, you can write to me in the feedback section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Do subscribe to the Coscopy webinar channel to stay updated on the market developments. Goodbye.